Hope you're all doing good. In this video, I'm going to be talking about market structure, break and retest pattern, and I'm also going to break down the pair I'm going to trade next week. And I'm going to be talking about all simultaneously, so not in this order I have it in here. So to just recap, let's start with the market structure. Whenever the market is bullish, market moves in higher highs and higher lows, higher high, higher lows, higher high, higher low. Whenever the market is bearish, market bearish in lower low and lower high, lower low, lower high, lower low, and lower high. Since we are trading a bearish market next week, I'm going to remove this bullish structure and I'm going to talk about this bearish structure. When the market is bearish, we don't want to be buying, we don't want to take these little buys. That's a high probability of losing the trade. We only gonna sell this trade. And where do we sell the price? We don't sell it from the lower low, we don't sell it on the middle of the move, we sell it at the lower high. We sell it at the lower low and lower high. We sell it at the lower high. So if we go to the trade, this is a dollar versus Canadian dollars. The price create the lower low, lower high, and it's created the lower low, and the potential lower high is to be created next week. That's where we sell the pair from. We sell it at the lower high. It's very simple. We don't sell at any other moves rather than the lower highs. But the next thing is, do we sell the price just because of market creating lower lows and lower highs? No, we should have a lot of confluences as possible, and this market structures is one of the core important reasons. And the second important reason and the confluences is the area of interest. Many people call it in different ways. I call it area of interest. So what is area of interest? It's an area that's have been retested minimum of 3 touches. So the idea of area of interest is whenever the price is above, we are buying, the price is going up. Whenever it's above, we are buying, it's going up. Whenever the price is under, we are selling, the price is going down, price is going down. So whenever it's above, it's acting as a support area. Whenever it's under, it's acting as a resistance area. So when the price creates the lower high point, it's gonna also happen to be retesting this area of interest, which have been rejected several times in previous history. So we have 2 important reasons in order to sell this pair, and that's the main reason I'm gonna sell this pair. Just to illustrate another example, I've taken this trade like in the start of the April, I guess. Yeah. So if you look at this pair, this is an area of interest that have been retested multiple times, and whenever the price is above, it's going up. Whenever the price is under, it's going down. As you can see, if the area of interest have minimum of 3 touches, it's a strong trade. But if it has more than 3 touches, it's a more than strong trade. We have 1, 2, 3, 4, 5, 6 touches. So when the price broke this structure, it created the lower low, lower high. The moment the price broke this structure, it went to lower low, which went bearish, and it created the lower high into the area of interest that have been retested many times, that have been rejected many times. As soon as it got to the lower high, it created the pin bar rejection candlestick pattern. And I supposed to put my stop loss above the pin bar and above this area of interest as well, just because there is a high probability of price coming back and retesting this area of interest multiple times. So we don't want to put a tighter stop loss and get stopped out in case. And this trade happened to be the trade that tried to come up and retest this area again, but fortunately I have saved by few pips, and this is a very tight stop loss due to some other reasons. I'm not going to talk about that, but then you can see how it created the huge lower low move. Then it just continued lower low, lower high. And if you just copy and paste this move, lower low, lower high, lower low, lower high, lower low, if we just take the same move to the pair, the move that creating right now, so create the low low, lower high, just a second. All right, so create the lower high, lower low, lower high, and lower low. So now we're gonna wait for the lower high in order to sell this pair, which has created this lower high and sell this pair. And another thing is, do I sell this pair as soon as it gets to this area of interest and as soon as it creates the lower high? Not exactly, because as I mentioned before, you need a lot of confluences. Right here, when the price gets to my area of interest, I need an entry confluences. To just summarize the entry confluence or entry confirmations, you need a daily doji or daily pin bar or something, some type of rejection. That's mean the price has created the entry confluences. That's where you can enter the sales and have the stop loss behind the area of interest and behind the pin bar, and have the take profits to the next lower low. So hope that was like really helpful for you, and good luck ahead of the week. I catch you next week. 1 2 3 4